Did you know that star investor Cathie Wood just released a massive bombshell about Tesla stock's future? Well, it is not much of a surprise when there is news about Tesla, as the company almost always has surprising news to share, whether a good or bad kind. Stay tuned and keep watching to find out what Wood has to say. Tesla stock is back to the $700 range price tag after it reached $800 after the Q2 financial report was released to the public. This made people wonder whether the EV company's stock is still on the dip and when the prices will finally go up. Today, you will find out a massive bombshell about Tesla's stock's future that Cathie Wood has just released. Tesla fans who check the company's stock price several times each day know just how extreme the stock price fluctuation is. This has been a concern for most investors, as the EV company's stock does not seem to be getting over the dip. Still, a lot of investors remain bullish on Tesla and believe in the company's potential. Among them is Cathie Wood, an American investor, a star stock picker, and the founder, CEO, and CIO of Ark Invest, a company with $60 billion in assets that invest in innovations like self-driving cars and genomics. Wood is often called the most underrated investor in the game, since not only is she incredibly persuasive in her investment arguments, but she has also got the proven results to back up her surprisingly discerning claims. Just recently, Ark Invest CEO Cathie Wood dropped a massive bombshell about Tesla stock. Many Tesla fans are familiar with Wood, and most of them heed her advice, since she has been correctly predicting Tesla's surging stocks through 2019 to 2021 and the years prior to that. Wood's recent purchase of an additional 3,000 Tesla shares is believed by many to be the big bombshell that predicts a new price soar for the company's stocks. This move from Cathie Wood seems to be a huge gamble for many, especially with the way things are looking and where the company's stock is currently sitting, which is at the $700 range. However, the star investor is confident with her faith in Tesla, since she firmly believes in the EV company's inventive spirit. Tesla's innovative projects and emphasis on research and development made it the leader in the electric vehicle market. Wood is particularly impressed with the way Tesla addressed problems that arose because of the COVID-19 pandemic. During the pandemic, when all other companies and manufacturers have been struggling with chip shortages and supply chain bottlenecks, Tesla pivoted between suppliers by rewriting its software just so the factories and plants won't stop running. More than that, Tesla has opened 2 new manufacturing facilities in Austin and Berlin. These new plants aim to increase production along with the Shanghai and Fremont factories. These developments can most possibly mean an increase in operating margins and scale to manufacture vehicles. The opening of Berlin and Austin allowed them to achieve higher gross margins. Wood said, "What we said during COVID-19 about innovation solving problems will move into overdrive." She further stated that Tesla is poised to deliver exponential growth for many years as it expands its autonomous driving programs. In fact, Ark Invest, spearheaded by Cathie Wood, has provided an open-source valuation model of Tesla stock to the public. The firm believes that this model is a more transparent way for investors to see the research that Ark Invest has done on one of its major holdings. The firm's 2022 Tesla research includes updates related to autonomous ride-hail assumptions, capital efficiency estimates, and forecast for the year 2026. Based on its model analysis, Ark has set a price of $4,600 for Tesla by 2026. The firm also concluded that there is a 25% probability that Tesla shares will be worth $2,900 in 2026 in a bearish scenario and $5,800 in a bullish scenario. Tesla's capital expenditures per incremental unit of capacity has improved, falling from $84,000 to $7,700. Previously, Ark expected that Tesla would spend $6,000 to $8,000 per incremental unit of capacity in 2025. But now, the firm expects that it will spend only $2,000 to $7,000 per incremental unit of capacity in 2026. However, Ark Invest's optimism about the leading EV company is mostly based on products that are yet to be released in the market. According to Ark Invest, Tesla's robotaxi business should account for 62% of its enterprise value and more than half of expected earnings before interest, taxes, depreciation, and amortization (EBITDA) in 2026. As for the company's revenues, the electric vehicle business is expected to comprise 57% of Tesla's total revenues in 2026, while the robotaxi business will make up 34%. Regarding the number of cars sold by the company, assuming a worst-case scenario in 2026 in which 10 million units are sold, the company would have generated $372 billion in revenues and have a share price of $2,900 with a market cap of $3.3 trillion, reflecting a compound annual growth rate (CAGR) of 24%. Considering a bullish scenario in which 17 million units are sold in 2026, $513 million in revenues would be generated, and Tesla's share price would be $5,000 $25,800 with a market cap of $6.7 trillion. That would include a CAGR of 42%. Ark Invest is betting big on Tesla's future. Among all the combined holdings of the Ark Invest ETF, Tesla is the second largest investment behind only Zoom Video ZM. Tesla accounts for nearly 6% of the fund, with shares purchased between $256.67 and $326.30. Do you think Cathie Wood and Ark Invest's prediction for Tesla stock in the future is probable? Let us know what you think by leaving a comment in the comment section below. Tesla, on the other hand, seems to be doing its part to alleviate investors' concerns. In fact, despite the current dip in stock prices, Tesla has proven itself in the first and second quarters of 2022, and investors are keeping their eyes on new developments. In fact, on March 22nd, Tesla officially opened its German plant near Berlin, supplementing auto assembly plants in Shanghai, Texas, and California. And on March 28, 2022, Tesla disclosed plans for a stock split, conditional on stockholder approval, to expand the company's authorized number of shares at its 2022 annual meeting. In the Q1 earnings report, Tesla reported a net income of $3.3 billion, a quarterly record exceeding Wall Street estimates, as revenue surged 81% year-over-year to $18.8 billion. In the most recent Q2 financial report, the automaker reported revenues of $16.934 billion, which is about $400 million more than Wall Street expected, and earnings per share of $2.27 versus $1.81 expected by Wall Street. In 2021 alone, Tesla delivered more than 900,000 vehicles and planned to increase that by 50% in the current year. The company aims to deliver more than that in the succeeding quarters. In fact, during the Q2 earnings call, Tesla CEO Elon Musk shared that Tesla's new factory outside of Berlin surpassed 1,000 cars per week in June, and that he expects the company's new factory in Austin, Texas to exceed the 1,000 per week production milestone in the next few months. Last April, Tesla opened its Austin, Texas-based Gigafactory, which is a crucial step in the company's delayed plans to begin production of its electric Cybertruck. "We are really entering a new phase of Tesla's future," Musk told the 15,000 people he invited to celebrate the opening. During the Q2 earnings call last week, Musk said that Tesla is hoping to start delivering the Cybertruck, an experimental-looking pickup, in the middle of next year. The aforementioned information about Tesla showed how the company continued to flourish despite the numerous roadblocks, proving that Tesla defied odds and has a great potential to succeed more. In fact, the numbers presented to investors in the most recent financial report indicate that Elon Musk's company has been weathering global supply chain disruptions, higher material costs, and COVID-related disruptions in China much better than its competitors. Tesla's production expectations, along with solid global demand for its vehicles, offer a good reason to remain positive on Tesla stock. A Tesla bull reiterated Tesla as a buy, saying it sees robust revenue growth for the rest of 2022. It is worth noting, though, that although these predictions are a product of experts' exhaustive studies, there are a lot of economic factors that affect stock prices which may well possibly affect these predictions too. That said, it is important to conduct a study of your own before making a huge decision in the investing field. The only way you can possibly believe and possibly come up with a good opinion is to go do the research yourself. Legendary investor Ron Barron said, "You can't rely on other people telling you what to buy or what to sell." For more Tesla stock content, visit our channel and watch our other videos.